All right, guys, good morning. It is October 11th here, 2018. We're going to go over the data from the prior day and first day doing it with the live stream and the video. So check it out. Make sure to share this on your social media if you guys like the content, but I'm going to be going over all of the data here for the S&P 500 to start off economic news. Before the bell at 1 a.m., Bank of England Governor Carney will be speaking, or he already spoke. At 4:30 a.m., we had Great Britain Bank of England Credit Conditions Survey. At 5 a.m., Bank of England Governor Carney spoke, and then at 6:45, MPC member Veal spoke. So that was a lot of Great Britain pound news in the morning. At 8:30 a.m., we have jobless claims and then CPI. After the bell at 10:30, we're going to have the natural gas report. At 11 a.m., we're going to have the EIA petroleum status report. And then the 30-year bond auction. 4 trend biases in the indexes. S&P is bearish, Nasdaq is bearish, Dow is bearish, Russell bearish. Shorter term time frame, bearish ES, bearish Nasdaq, bearish Dow, bearish Russell, and on the midterm time frame, we are bearish all 4 indexes as well. And on the longer term time frames, 20 to 60 days, the S&P is bearish, the Nasdaq is bearish, the Dow is neutral, and the Russell is bearish. Obviously, a lot of those biases change on the higher time frame with the breakdown of the prior day. Earnings events before the bell, DAL and WBA. Tomorrow before the bell, we're going to have a lot of the banks, Citibank, JP Morgan, PNC, and Wells Fargo. So that's going to be a big impactor. For our previous day's summary in the S&P 500, we'll go over this. It'll be hard for me to kind of get used to having my image on this screen, so I want to make sure that I'm not covering any of the useful information. So for the, let me turn the extended session on here, guys. Our bell to bell high was 2880, and that is much higher than we're currently trading. Believe it or not, it's 100 points higher. 100 points higher where we're currently trading. The bell to bell low 2789, which is still above where we are currently trading. Settlement was 2781. Value area high came in at 2858 with value area low at 2804 half. The point of control 2842.75, and then the European close here was 2846 quarter. Volume on the session was 3,145,000 contracts. Overnight highs, right now the overnight high here in the S&P 500 just got put in 2786 half, and then the overnight low down here at 2747 quarter. For our floor trader, pivot point support and resistance levels, R4A is going to be the untouchable 2962, R3 2934.75, R2 2907, R1 coming in at 2844 quarter with the pivot point for the day 2816.75, S1 2753.75, and S2 at 2726 quarter, S3 2663 quarter, and S4A 2600. Okay, let's take a look here at these indexes. Like I said, I'm well aware that my photo or my image is over the left hand bottom of the screen, so I'll be aware of that as we cut through some of this analysis. So one of the things I want to do, you guys, this will probably be a longer video than what I normally do. Obviously yesterday was almost a historical sell-off, but I don't want to get too dramatic with it and just focus on the technicals here, guys. So let's take a look here at the Russell. One of the levels I have marked up, 1557. I actually tweeted this out the other day in the overnight session. So what I'm looking at here, this 1557 is the full leg start. This goes back to April of 2018. The open of the last week before May, that's a leg start on the weekly, which is, we don't get too many of those a year. So it's a 3-bar move off the open. That's at 50.57. And that is where we have tested here in the overnight session. So obviously with the ranges that we're having right now, it's going to be pretty hard to nail levels down to the tick or to the point. So we're going to be using some of these bigger levels that are in play. Another thing I want to talk about and pay attention to is that the low of 2018 too high has not broken, and we want to be aware of where that 61.8 is. That is 1541.6. 1541.6. Let's see here. Creating that alert. I want to make sure that this is 1541.6. So I'm going to create an alert with that level, and that's something we are going to want to be aware of. Now, as far as now that we've gone over this higher time frame, just supports, guys, the momentum is clearly down here. Although there's so much volatility in this market, it's absolutely a two-sided trade. Most probably going to be a two-sided trade today. Yesterday, not so much on the two-sided trade. Pretty much, if you were taking longs at any point in time, you were getting hit. So I want to talk about a couple of the levels here that we've had come into play and that we can potentially come into play at a later point in time. Number one, going into yesterday before the breakdown, we had the low of last Tuesday at a low, holding a low to low Fibonacci extension sequence. That traded and then just completely blew through both the -23 and the -61.8% profit target. That low to low is a possibility. Now, those are going to be higher levels of resistance, but we are going to want to be aware of them when they trade. So drawn to the current low, I am going to go ahead and just mark those up. So I'm going to draw it to the low, and then I am going to take my little trend line tool, or not trend line, but this horizontal drawing tool, and mark up 16044, and then also 1592.1. That is roughly the 38 and 50% retracements of that extension. So those are going to be higher levels of resistance that we're going to watch. It's a C maker new low sequence that could be coming to play possibly today, maybe tomorrow. Now, because we blew so aggressively through that sequence, the low of Friday at the low becomes the new sequence. So 1587.4, that's what I'm going to be looking for potential resistance, and also that 38.2, which is the 1579.6. 1579.6 lines up with that, basically lines up with that old 50% retracement long. So this should be the first area that sellers are willing to step into if they're going to have a continuation. But we've sold off so aggressively, there's not a lot of circumstances we can look back and compare this price action to. So we have come into some major support levels here. I'm expecting a little more of a consolidation here, and then whichever way we break in the direction of that consolidation, whether it is to the downside after trading resistance, that's going to be down to 1538, or to the upside at support, we can be aware of those levels. So that's what I have here for the Russell. Moving on now to the S&P 500. Just want to talk about, these are the levels I had from last night, which is kind of cool to see them trade. So there was an extension short, which I've deleted because the sequence has broke. And then there was these two levels, one of them being 27.47.5 and the other being 27.44.5. 27.47.5 is basically traded one tick in. So first thing I'm going to do is go out to the daily chart, a year daily chart, and then I want to mark up, show you guys the low of 2018 too high. I believe that level is still below us. Yes, it is. So that level is 27.38. 27.38. That is a significant level we need to be aware of below. So I just want to make sure that that is correct. 27.38. Okay, and that is with the extended session currently turned on. So what you're going to want to do is come in here and then go ahead and create an alert. 27.38. 27.38 at or below. Okay, 27.38. Now going down to the hourly chart, to go back a little further, it looks like. Go to the 4-hour chart, actually. Going down to the 4-hour chart, these levels I had marked up was basically, if you go back to it's July 6th, I believe is this date, this breakout zone. I'm going to move it a little bit forward so it's more in the center of the screen. This area we broke out from, this giant, this candle here, the 4-hour candlesticks, 30 points, which, based on yesterday's range is nothing, but at the time that was roughly where we had broken out. So that is where I pulled these levels from. And I'm going to go to an hourly chart here. I just need to go back 90 days to see this. Actually, might have to go back 180. That's July, so let's go back 90, see if it pops up. All right. So basically this is the high. It's a little easier to see now. This is the high we broke out of, and then I just have the top of that first leg start candle marked up. So this is the zone we have fallen back into right now and have found support. And like I said, guys, with these sides of ranges, number one, just a word of advice, reduce your size. If you're trading a 2 lot in the S&P, you're going to want to go down to 1 and double the width of your stops and cut your size in half if you want appropriate risk levels. Right now, the ATR of the hourly candles is 14 points. Typically, that can be the ATR on a daily candle. So, if you're using 2-point stops in the S&P 500, I'll just show you on a 5-minute chart. And this is in the overnight session. In the overnight session, the ATR is basically 5 points in the S&P 500 for a 5-minute candle. So if you're using a 2-point stop, you will get stopped out left and right. So you are going to need to reduce your size by at least half and then increase the size of your stop. Otherwise, if you don't, you will just be having way too much risk, and your probability of getting stopped out in those small of stops is super high. So just something to keep in mind here today for those of you guys who are trading futures. Also, great day to trade Nadex, so shout out to them. Just because you don't have to be as concerned about getting taken out. So right now for the S&P 500, guys, major levels we want to be watching. The low before the breakdown to low, it to me is going to be very significant as far as what happens when we get there. That 50% retracement is 2808. Okay, so this is roughly the area I would expect the higher time frame resistance to come in here today. So we will have to see what the market wants to do as we trade up into that 2808. This is a day to me for being very, very patient. We do have a leg start down at that 27.55 here, guys. This 27.55 was an important level for me last night, and you can see it actually held pretty well. Basically every single hourly candle closed above that level, and all that was an old profit target. Moving on to gold, to me, especially for those of you guys who don't want to be as concerned, the volatility provides a great opportunity. But right now, if you're going through the funded trader program, you don't necessarily need to trade that volatility, because that volatility, it's not going to really help your upside, and it can be a huge risk to your downside with the frequency of stops that you'll be taking. So take a look at products like gold. Gold has had a fantastic breakout here, guys. This will probably be the one that people are going to be ignoring here today, but I do think it'll be at least on the smaller time frames, more technical and easy to predict. There's going to be a lot of fast movement in the indexes, and if you've never traded that type of market before, you definitely need to be careful, and I would focus on things like gold and oil or other markets here today. So let's take a look here at the GC market. This is a gold futures contract. We had an incredible breakout in the overnight session. Basically, I had a resistance zone right here at this 1200. As soon as we cleared it, you guys, we are straight up. I think we're out clearing a 10-day high. I'm going to go to the daily chart real quick. And we are clearing a 10-day high here, which is pretty significant. Now, there's a couple of resistance levels that go back in time, but if you guys look at this chart, this finally could be the beginning of this gold breakout, especially because you have the quote-unquote flight to safety. So flight to safety is basically, you know, when the market sells off, people start buying other things, gold being one of them. So you have more of a fundamental story here. If we can start clearing above these resistance levels, that we've been in this consolidation basically since the end of August, and we're coming into halfway through October, guys. If we can begin getting bid above 1216, I really have no resistance to 1234. So if we bid above 1216, I have no resistance to 1234, and gold will continue to be a really nice aggressive trade to the long side. So I'm paying attention very closely to here. Actually put a position on using Nadex in gold last night. But I was only looking for a move above 1201, and we're sitting about 11 points higher than that. What I'd be looking for a continuation entry right now, just going down to the hourly chart, I'm going to identify this most recent extension that traded to target. I'm going to have to go down, I'm going to have to go down to the 15-minute time frame. Okay, so we had this strange extension. This one that I have up on my screen can only be seen on a 5-minute chart. Then we go extension, blowout of targets. Then we go extension, trade, same anchor new high. So the same anchor new high sequence here in gold brings me down into the 1209 to 1208 support zone. So 1209.3 would be that 38% retracement, and then 1207.9. So that's what I'm going to be watching here. A break below that, there'll still be other support levels below, but guys, look how aggressive this bid has been in gold. It's the most aggressive bid out of any of the markets that I'm watching here. So that's what I have for gold. For the Dow, moving on to the higher time frame here, I'm going to go to a 1-year daily chart. 1-year daily chart. Couple of things I wanted to watch here was, one, just the full halfway back from, it's actually June. Now, the interesting thing, and the reason I'm pulling that anchor, is the low of the year, too high. Sorry, I think it was this low in, what's that, April, too high, basically consolidated around that level, and then we completed the negative 61, which lined up with the prior high. That's where we sold off from. We do want to be aware of the full 50% retracement here, 25,027. 25,027 is well below about 450 points, or half of yesterday's range. Sounds like well below, but we cleared 400 points in just a few hours yesterday. So that is very, very well in play over the next few weeks, possibly even today. And that is a full 50% retracement for the year. That is a very, very big level. These other levels I have marked up here, you can see this is a daily leg start at 25,209. That is the zone where the rally began in August. That is what we came down into, something to pay attention to for supports. Those levels will stay that way. And then as far as resistance goes, guys, same thing, low to low extensions on the higher time frame. That is Monday's low to low. Okay, there are more aggressive extension sequences in here, but we could sit here all day and drop 12 different levels, but I really want to focus on the levels that I think are going to have the best reaction when they trade. So that 50% retracement is going to be 25,703, and I'm going to mark that up. As the market opens, we're going to obviously observe how things are trading and formulate an opinion of the trend. So that's what I have for the Dow here. For the NASDAQ, I believe did come full halfway back. I also tweeted this level out. I'm on @Gleason on Twitter, but stocks or futures is not the only thing I tweet about. So if you're easily offended, don't follow me. But January, February, okay, that low right there. That's a low of 2018, too high, guys. The Nasdaq's the first market to come full halfway back for the year outside of the Russell, and it has so far stuck it the best. So this is something that we obviously want to take into consideration. We want to pay attention to. The full 50% retracement for the entire year has traded. I mean, this is crazy. Literally, we spend the entire year rallying, and then from the all-time high goes 1, 2, 3, 4, 5, 6, 7. Basically, 7, 8 days of trading. We come the entire full halfway back. That level is 69.46. And that, because we have traded that level, is going to be the most significant. I would love to see a retest during the regular trading hours session here today. I do prefer that those levels trade in the during the regular trading hours session, so there's more volume to fill. Right now, the low of Monday to low is 50% retracement is going to be this 71.06. The 38 is 70.63 half. Okay, if we break above 71.48, that's going to confirm this long trend, but this is a very significant support level here in the Nasdaq. Now, moving on to oil, which I think is going to be, just like gold, a little easier to trade than the indexes. Now, like I said, if you don't have experience trading the indexes in high volatility environments, you need to probably reduce your size by a third. Reduce your size by a third and increase your stops 3 times. So if you were using 2-point stops and trading 3 contracts in the S&P, trade 1 contract and use a 6-point stop. That's just the market we're in. That's the reality that we're trading. So it's a total regime change. You need to be aware of that. If you're using 2-point stops, you're just going to get smoked. There's just no way 2-point stops are going to hold in this type of volatility. We need to be aware of the relative range. For the oil market here, we have this full halfway back, guys. We talked about this on Tuesday. We talked about it setting up on Monday. We traded it Tuesday. We traded it Wednesday. We completed targets here today. That's a fantastic completion. People looking for the the high of Tuesday, too low for a next entry level. Now that lines up with this leg start down 73.46, and I think oil. I know there's nat gas inventories today, but I believe for whatever reason there is one over the news this morning. I think there was oil news as well. I know he's usually on Wednesday, but sometimes on Thursday. Also for support levels below 71.60, that's been on our chart for quite some time. It came just barely in a front run. I do want to mark up the low of the 7th of September to high, and that level is 71.88. So that is also where we're catching a little bit of support. And I actually had this marked up here as well. So there's a lot of support here in oil, like actually 3 different levels. So I wouldn't be surprised to see a little consolidation, break out above these swing highs, and make our rally into the resistance level at 73.46. Okay, guys, that is going to wrap up this morning's trade plan that I'm going over. And I spent a lot of time on these indexes here. For everybody who's in the Major League Trading Discord, I will share all of my levels with you in the Discord, in the trade room library. So take a look for that. I'll also post them in our normal trade room for now. The normal trade room being the Adobe trade room. So if you're in there, I'll post them in there as well so you can load them up in there. As a reminder, we're going to be moving all this stuff and everything over to Discord by next week. So make sure you've created a Discord account by now. And if you like this video, guys, give me a thumbs up. Make sure to leave your comments below. And I'll see you guys in Discord. Chat me up, hit me up. Take care, and have a great day.